Love one, it's Red with RedDragonLeo.com. It's Monday, December 3rd. Thought I'd do another video here for you. Just more on the technical aspects of what I see in the market. And I'm looking at Ron Walker's charts. I like to look at his charts. He draws different lines than I do, so it's always good to check out other people's charts as well from time to time. So looking at a lot of his charts, as you can clearly see, we are getting very, very overbought. Not, extremely overbought, but we're overbought. Let's just say that on the daily chart right here. We are hitting some resistance right here with this moving average right here, which is the 50-period moving average on the daily chart, coming in around 1420. We pierced through it and popped back down, closed red, and we're resting right now on the 100 moving average at 1409. So, my thoughts are that we might just open up a little bit tomorrow. At this point, it's not looking good for them to go up to that 1430 to 35 area where I had drew a trend line, which is, let's see here. I can show you here the trend line. The trend line is, of course, right here. And it's a little higher than what I thought, but I was thinking that we might actually make it up to about this area. Maybe that's drawn a little bit too high. I thought it would be more in that area there, but it's not looking likely that's wanting to hit that area. As you can see, again, it is losing steam, so whether or not this is going to be the rollover move that takes us down and takes out this low or not, I don't know. But what I'd be looking at for tomorrow, and this is my scenarios, I actually posted it on the blog, what I thought the possible scenarios are with A, B, and C. And they are, okay, I drew this line right here to see what would happen with a falling wedge, and I'm going to show that on the 5-minute chart. And I drew that, and sure enough, it did curl up and pop out of there, but it failed and went right back down. That's very bearish. Come down here and found support at this area. It's actually got two lines, 1407, and this is the May 18th low at, where that trend line is starting right here, the one that sloped down. You can see here as I'm moving on it, connecting that high right there. And then this is the horizontal one of support, and that's acting as good support. But if that breaks, there's really not a lot to stop it from dropping pretty significantly, and at least retesting 1400. If we look at this on a different chart here, different time frame, you can see this low area right in here is where it is holding support right there, and then this rising trend line as well. You technically, we are below that, so it's not looking good. It's not looking good. We always know that these market makers are great at tricking us, and so while everybody is looking for that 1430, 1435 area, and some people even looking for 1440 to this trend line, and obviously you could draw it a little bit further down. I think I was talking a lot more on the ES, which is sloped down a little bit more and closer to the 1435 on the ES. But regardless, that's what everybody's looking for, and it doesn't look to me like it's going to get up there. The high we got today was gap window from this area right here. It did not do a gap fill and hit this trend line. It simply went up here and just went into gap window, and that's it. And then it's just rolling over. It's too weak. So at this point, regardless of what I've wrote in the post, I'm leaning more towards a small move up in the morning tomorrow, whether it's a gap open or whether it's just a flat open and then a move up. I don't know. I don't think it's going to be much at this point. But whatever it is, I think it should just be shorted. I think the high is in today. That's what I'm trying to tell you. It is also, by the way, a this being the 3rd of December. Today is an 11-day. And we routinely have highs on 11 days. Not always, but routinely. Hang on a second here. Okay, sorry about that. Now, where was I? For you guys, it was just a second. For me, it was about 10 minutes. I forgot where I was. But what I was saying was, it has broke this important trend line, and everything looks bearish right now. We've already got some negative divergence right here from this peak to this peak. As you can see, it's sloping down, and the market has went higher from this high to this high. We've also got one, and you don't really count that space in between because it was time off. I think that was for the I think that was a day off for a holiday or something. That period right in there. But regardless, that's one high. Consider that one high. Then here's another high. Here's another high. 3 highs. You know, there's that old saying: three peaks and you're doomed. The charts match up with that. Obviously, that's not always true, but I mean, 3 pushes higher, and then you finally roll over. And so, and it's also created this negative divergence right here. So when you couple it all together, just with the timing as well, with what I have already written in the post, that basically we have, let me put this in here. We have no money tomorrow per se, not very much, 150 million to 225 billion for December the 4th, and then December 5th we don't have, that's Wednesday, that's when we got 4 billion to 5 billion put in the market. And that would be the day that you probably would see a bounce in the market as they pop it higher. And then you've got nothing pretty much there on the next day, the 6th, on that one. Now this one's a little bit confusing here. So these are shorter terms, I guess. And then you got nothing on down here to, let's see, that's really not much, all the way into the 13th. So my thoughts are that this week might end up being a choppy week, but down biased based upon the money that they're going to put in. And then there's just like this big void of money between Monday of next week and Thursday. It's like Thursday is so literally Monday, Tuesday, Wednesday of next week, we ought to see a nice move down. That's what I'm trying to say, I guess. Just based upon the lack of money that the market has. So I did put this here, the scenario that if they gap it down in the morning, unless it's huge, of course, the short-term bottom would likely be in, and then they might curl it back up. And that's only based upon the charts that they could simply turn them back up if they did it very quickly. I don't feel that's the case right now. I said I thought that maybe that would be here in the post, but just re-looking at it again and analyzing it again, it really feels more like they will either gap it up in the morning and it puts in the top today, or they'll open flat, maybe rally just a small amount, and then go down. Either one, I don't expect. At this point, it is looking more bearish. The lack of money tomorrow. So, this one being the 60-minute chart. So what you would probably look at is something like a smaller term chart to run up. Like here's your 10-minute chart. So maybe you run this up here and hit 0, then you roll over. Or 15-minute chart. Let's look at it. Same kind of situation. As you can see, it's down here in the dirt. Maybe it curls back up a little bit for the first hour, then it rolls over, and so maybe you just chop it up and hit this resistance, then roll back over. Chop a little bit, not a big move, and then you roll over. So right now it's I'm going to have to say that they succeeded again in fooling me and thinking that we are going to go up here to a higher point, or to either at least this line right here to fill the gap, or to this triple top 1, 2, 3, which is 1430 to 35, which is what I originally thought. But now it's leaning more and more towards they have, again, fallen short of where all the bears are. I'm thinking all the bears are in this zone right here, from this line down to around 1430. And that's all based upon a top here, a top here, a top here, and this downward sloping trend line. That to me tells me that this is where all the bears are, and they didn't want to let them in, so they simply gapped it up a little bit, then came back down. And if we look at this on a 2-hour chart, you can clearly see here's your peak, here's a lower one. So based upon a high here, then a higher high, lower high here on the MACDs, that's your negative divergence. You can draw your line from here down to there as your negative divergence. We are headed down big time, and you have broken this trend line. Do this on the 4-hour chart, and we're going to be in the same situation pretty much. Yep, you can see here we have crossed over and ready to go down. Could it curl back up? Yeah, I guess it could, but the rest of the market doesn't support that. It really doesn't. So when you look over here and you see where the market kind of curled over, looked like it's ready to go down over here in September the 12th, and it was losing steam, and then it had a ramp back up again, where it went higher on the MACDs and lower on the histogram, and higher on the market. I don't think that's the situation here. I think they've already had their negative divergence between this line right here. If you can draw a line, I think it's already had its negative divergence, and we're ready to go negative. So again, if we have any pop tomorrow, maybe up to this resistance around this 14-15 area, if you're lucky enough, that to me would be the area to get short. Looking at the yearly chart and the daily chart, I'm sorry, again, and you can see that we should, down here, we should roll over. This should go down and put in a higher low on the MACDs. It shouldn't go down to this negative 17.5. So while it puts in a higher low, the market should actually put in a lower low. So that means we should break this over the next, who knows? I mean, we can easily do it into the 13th of next week and bottom, and before they put any money in the market. Now, I picked the 13th for several reasons. One is because they have money that they're going to be putting into the market at that point, and there's really not any significant money besides this Wednesday, and then on the 13th. But also, it's always a typical thing for them to put the low in the week prior to the options expiration. They do it either on a Thursday or Friday. Well, that's a Thursday, the week before OPEX, which is the 21st. The 21st. Okay, so we look at a calendar here. You can see that there, 13th, that's a Thursday, and options expiration is the 21st. So it'd be a good place to bottom it out right here and sell off hard. Will it happen or not like that? I don't know, but there's a lot still going on with this physical cliff nonsense. So that could be the last wave down and just take this one out. And by the time we get down, these two lines could very well hit each other and provide a necktie support with two trend lines. If they break, of course, then you're going down to this line here. And it's where I would say you are going to end up at based upon everything I'm seeing here. So, okay, I can't think of anything else. We're just going to have to wait and see how they do this tomorrow. Ron Walker's drawn a nice little channel here. Look at some of the other charts. I looked at some of these as well. This could indicate here that we'd go on up with the Dow, but it's just not looking likely at this point. And the weekly chart has hit the line there as well, the 14, 15, 10 period moving average. Let's look on here, the SPX we see, or no, the NASDAQ has also got three significant peaks, one in this zone, one in this zone, and then one here, and it's failed to hit that trend line on this one. And that was on that. And then here on the daily chart of the NASDAQ, you can see, bam, it hit that 50 period moving average dead on and didn't like it and flows right back down. And, Ron obviously thinks that we're going to put a higher low in and go. And it could be, but I'm thinking a lower low. So we're thinking differently on this. And then here's your Russell. kind of the same scenario, just up above it a little bit and close right back down on it. XLF, same kind of scenario. Everything is looking bearish. Okay, guys, I'm out of time. Thanks a lot, everyone.